All right, y'all. Today we are back on the charts for day 10 or 11, I believe. We're day 11, so we've passed day 10. That was risk management, right? Very important concept you guys need to understand if you guys are going to apply any strategy to trading or just want to learn trading overall. You need to understand what risk management is. It's a very core fundamental topic that a lot of beginners tend to overlook, especially when they're just starting out, because they think they can get rich making like doubling their money 10 times from 500 and getting to like a million or something like that. But you got to have risk management because that's what keeps your account safe and consistent growth and protect yourself and protects your capital for the long run, right? So you can make consistent gains over the long run. That's what we want. We don't want to get rich and then one day just happen to blow all our money away, right? We're not gambling like the casino. If you want to do that, you can go to the casino. We're here to trade. We're here to trade like a profitable trader. I want to teach you guys how to trade like a profitable trader and learn the habits of one through all the things that I've learned, all the knowledge that I learned that I apply every single day that got me my success. So that was risk management. That was yesterday's video. Today we are going to cover this video is putting it together. So I don't know what I'm going to title it yet. I want to make like a nice title for it, but it's going to be just putting it together, all the different pieces of the strategy that we learned, trends, momentum, a little bit about the 200 SMA and some of these indicators, and just build together my momentum strategy, because now I've taught you guys all the fundamentals to this strategy. All that's left is putting it together and applying it on the charts and showing you guys how to spot these plays and execute off of them. Okay, so we're gonna do that pretty much for this video. So let's go to the chart. Let me show you guys. Let me first break down what we need to see. Okay, this is what we need to see. So when we go to market open, of course, if you guys watched yesterday's video, I explained that you need to have a plan every single time you go into the market. Okay, and this is going to be our plan. This is what we're going to look for our strategy pretty much every morning. Okay, we're going to look for these things for an entry condition. Okay, first, what we could say, what is to, hold on, let me extend this longer, is 200 SMA. Also, say this. What direction is the 200 SMA? Pointing to. Okay, so this is going to be either to the upside or to the downside, or it's going to point straight forward, flat, whatever you want to call it. Number two, the next thing we're going to look for is price holding above or below the 200 SMA. So I'm going to just adjust this. Actually, I don't have to make it that long. Want to hold above if in direction, if 200 SMA. Here do this, hold above, and then we'll do slash below the 200 SMA if 200 SMA if the 200 SMA is pointing up slash below, up slash down. So the first, we want to see the direction of the 200 SMA. Is it pointing upwards, downwards, or flat? Okay, is price holding above or below the 200 SMA? We want to hold above. The reason I put it together like this, basically, the statement would go like this: you want it to hold above the 200 SMA if 200 SMA is pointing up, or you want it to hold below the 200 SMA if the 200 SMA is pointing down. Okay, then third thing we want it for is price forming higher highs or lower low. Higher highs and higher lows, or lower highs and lower lows. Okay, then we want to see is the trend clear and relatively strong. Okay, that's just an extra confirmation to see, is the trend clear and very strong. By clear, I mean obvious higher highs and higher lows, and strong is going to kind of relate to the momentum factor. Okay, and then the last thing we want to see is there a fresh, is there a pullback that is followed by a strong momentum candle while respecting trend in direction of the trend? Is there a pullback in the direction of the trend that is followed by a strong momentum candle while respecting trend? Okay, the trend. So these are kind of the 5 rules you want to go from top to bottom when you want to take an entry with this strategy for this momentum trend following strategy, right? We're combining all the concepts we learned about trend, momentum, 200 SMA, highs and lows, and momentum. Pretty much like same thing. But yeah, it's nothing new. It's all, I'm just combining it all into one strategy right now. So first things first, this is today's price action, by the way, Monday, January 20th. Today was the inauguration day, the Martin Luther King Jr. holiday, I believe, celebrating, remembrance. And the market, I think, was closed, or it was like ending early, the futures market at least. So we didn't take a trade this day because the price action is usually going to be slow and less volatile. But let's just go over, see if we can find any plays with this rules, right? Let's see if we can find anything. If we look, so going into market open, okay, again, I only trade the first 45 minutes of market open. So if you guys can trade other times, I just found my best performance to be the first 45 minutes. And with the strategy, I found my performance to be the best within the first 45 minutes. So it's not a general rule of thumb for the strategy. You guys can apply this to almost any time frame, at any different time window that you guys like to trade. I just like to trade the first 45 minutes because that's good for my focus and my psychology, right? Because the longer you're trying to focus on the markets, the higher the chance you're going to make sloppy decisions and poor choices as the time goes on, right? Your brain can only focus for so long and make smart, quick, logical decisions and think on his feet for so long. So I found my best to be the first 45 minutes because there's enough price action, enough volatility to take advantage of, and it's a good amount of time to for my focus to stay sharp. And then after that, typically, from what I've observed, my focus doesn't stay sharp like that. So I just found my best time to be 45 minutes. Enough yip yap about that. Let's go on to finding plays. So going to market open, what do we see? Over here, the 200 SMA was sloping downwards, but we did get a lot of momentum pickup right here, and we shifted the trend to the upside, right? We broke past this low. Right, we were downtrending. We broke past these highs, pulled back, and then we broke past this high again. Okay, we broke past the higher high. I'm clear that we're in an uptrend. Now, we go all the way up. We do some sort of pullback. We're still maintaining above the 200 SMA really strong. We are also sloping up as well. So let's go back to our list. What is the direction of the 200 SMA pointing to? To the upside. Okay, we want all of this to align. Is price holding below the 200 SMA? It is holding above it, and that's what we want to see when the 200 SMA is pointing to the upside. So 200 SMA pointing to the upside, and price is holding above it. That's already good. I wish I could put check markers so we can checkbox it, because that will help a lot for visualization about entries. Is price forming higher highs and higher lows? Okay, so price was forming higher highs and higher lows, but I guess you could say we kind of pulled back a little bit, but we ended up breaking past all these highs again and doing some sort of pullback, and then breaking past highs again and then pulling back. Okay, so going to market open, let's see. Is the trend clear, relatively strong? Yes, the trend is clear and relatively strong. Is there a pullback? And now the last thing, this is what we need to look out for. The last thing. Is there a pullback in the direction of the trend that is followed by... Actually, I should put this... a healthy pullback. Now, I'll define what healthy is. Healthy is a term that I like to define a specific type of pullback. One that's not too little. This isn't a pullback in my consideration. It is a pullback in a sense like this or this. This is a pullback. Don't get me wrong. It's like a cool down candle or cool down candles, a few candles, but it's not necessarily pullback I don't count it as a pullback. A pullback is something like this. For example, let's say we're downtrending. We do this sort of thing where we chop our way up very slowly, or we do this sort of thing, or we do this sort of thing, or this sort of thing, right? Or this sort of thing even. Not something where it's just one candle or two candles, right? This is kind of like a pullback right here. This is a little bit of a pullback. It's a strong 2 candle pullback. This is a little bit of a pullback, not really too crazy healthy. We did get a momentum candle too, but I wouldn't take this trade, and I'll explain why later. This is a good example of a kind of like a pullback, right? You could have, once we were clear that we're in an uptrend, you guys could have entered off of this momentum candle. Okay, this is a pre-market time frame. I don't even trade this time frame, right? Because this is a momentum candle. Why? We have a relatively thick body. We do have a wick to the downside, but that's okay because the candle body is really strong and we don't have any wicks to the upside, showing that we don't have a lot of selling pressure and sellers keeping the candles down, right? We had a lot of buy pressure picking up the price from this candle, and a lot stronger than the previous candles in the pullback. Okay, so if I were to take this trade, the way I would set up my trade management is we would put our stop loss at the low of the candle, right? We'd like slightly below the candle, so like literally by a tick or two, and we set our take profit for a 1-to-1 risk to reward, right? Targeting just a regular 1-to-1 risk to reward trade, meaning our stop loss and take profit are the same length. Whatever length our stop loss is, that's the same length that our take profit is going to be. And then what do you know? The trade hits take profit on this over here, on this example. Now let's go to another example. Actually, let me explain why I wouldn't take this trade. The reason why I wouldn't take this trade is, first of all, we have a very large stop loss, way more than I would want comfortably, I'd normally want to have, and price has already moved a crazy ton past the previous high, right? Because the idea behind the strategy is what? We want to try to catch that next leg up from the pullback, right? We don't want to try to, because when we enter, this is kind of entering too late. Now, let me put this over here for better visualization. So essentially, we want to catch the move once we're kind of clear that we're uptrending. Let's say we're clear that we're uptrending over here. We want to wait for the pullback, wait for a momentum candle like this right here. Let's say we get the candle close right here, right? Let's say we have a thick momentum candle. Okay, enter on the candle close, target a 1-to-1 risk to reward. Okay, stop loss is probably gonna be anywhere around here, and try to just get our piece of the pie from the trend, and that's about it. Okay. But if we enter up here, it's a lot lower probability because we've already surpassed this high. If price decides to just pivot right here, let's say we enter right here and our stop loss is right here and our take profits right here with a 1-to-1 trade. Okay, price can literally pivot right here right after we enter it and not hit our take profit, and the idea of the uptrend is still valid. Okay, it's still valid. And I don't like trading it this far because we're entering way too late on the continuation, and price could literally just pivot here and it would be idea would still be valid, and we'd have to have a huge stop loss, and that it's not comfortable. I don't find it comfortable to have that big of a stop loss, and play just typically don't work out when I try to enter it way too late off of a big momentum candle that's already past the previous high. So a good rule of thumb for this is a reminder that I've realized like through my trading performance for the specific strategy, right? This is where the market experience comes in. When price typically passes this high and we get a momentum candle that closes after it, it's kind of too late to enter because we're already done with most of the next leg up, right? It can continue. There's no doubt that it can continue up and then do a pullback up here, and we would have hit take profit. But I just don't like entering it because when I take a trade like this, I don't usually bank on them because price likes to pivot earlier, and that's the idea I have for this type of trade. When we enter a little bit later, when after price pushes past the previous high, it's like entering the trade too late, and it could pivot right then and there, and it'll still be valid, right? We still have an uptrend, and you could lose the trade. So I like entering when we're down here, catching the next leg up like that, or even like right here, right? But it's you guys can choose your style of taking profits and stop loss and whatnot, right? Some people like to trade differently than others, and I'll cover exactly how you guys can change that part up and figure out a way you guys like to trade. Quick little sip of the tea. That bust, like perfect timing. It's like 8 o'clock right now. Perfect warm tea hitting perfect temperature. All right, so this trade, see, it didn't work, right? Because our stop loss is really wide. Means we're expecting a lot of movement out of price as well. Okay, and we didn't get that move up, right? Price still is in an uptrend, even though we didn't respect our momentum candle entry. Okay, but this one it did because we caught it a little bit early on, right? It just barely closed above below the previous high. Now let's go over market open and find trades, right? So market opens, right? We have this sort of uptrend. We do a pullback. We pull up. We do a pullback. This could be a valid entry for a trade right here. I didn't take this because I wasn't trading today, but honestly, if I was on the market today, I probably would have taken this. But you would put your stops a little bit below the low, right? Targeting a 1-to-1 risk to reward, right? Normally you would target the previous high like that, but you see we don't get a good risk to reward for that. So in that case, we're going to be going for a simple 1-to-1 risk to reward. And what do you know? That played out perfectly fine. Okay. Perfect. Now, next candle. This is, again, another example of a trade that I don't like to take, right? Way too big of a move, past the previous high. So it's a little late to enter, in my opinion. In my books, that's just how it is. And this trade lost. You know, that's just from what I've experienced. These kinds of trades don't work out too often. All right, the candle was way too big, although it was a momentum candle. Don't get me wrong. It is way too big to enter because, again, back to the idea that we don't like to enter right here when we're way past the move and our take profits up here and down here, because trade can reverse right here and continue, or it can reverse down here, hit our stop loss and continue right here, and it's still valid because we didn't break below this low and we still closed above this high and we continued our uptrend. Okay, way too late for me to enter. Okay, but if you guys like entering off of this, you still can just develop a strategy around that. Maybe you like doing, if we have a thick candle like this, you guys might want to put your stop losses halfway and then take profit 1-to-1. That sometimes works when we have a candle like this because you're not having as big of a stop loss, right? Because your analysis might be, okay, we have a momentum candle. Our stop loss is halfway because it's really strong. So if price decides to fall back, then it's too late to enter. Fall back even halfway of the momentum candle, it's too late to enter. And our take profit is gonna be 1-to-1 risk to reward ratio, just a simple target. And it sometimes might work for you, right? But I don't trade like that. That's just an example of how you guys can configure this to your liking. But yeah, let's see if we can find another example. So here might be an example of a trade, a time where it lost, right here. Okay. Here's an example of when it lost. The reason this might not be as valid of a trade is because we're having a little bit of chop right here, and it's not looking too A+ because we need it. We kind of want to break out of this chop zone beforehand, right? But in this trade, you would normally target either this high or this high, whichever one you would consider high. I would consider this one the high, so we'd be targeting this high right here. Right, this isn't an A++ setup, but we did get a nice momentum candle. We did have a little bit of chop beforehand, which I don't like to enter off of. But yeah, this was a solid trade. I'm not gonna lie. So this would have been a valid losing trade, right? And if you see, this is the start of a new downtrend. Okay, when the trade you're entering off loses and it's the start of the downtrend, that counts as a valid loss because you can't predict when the trend is going to stop, right? You can't predict when it's going to stop. All you can do is, if we're in a trade, if we're in an uptrend, you're just going to continue playing in the uptrend as if it's going to continue and continue and continue forever, right? You're going to take advantage of that high probability move, combining momentum and continuation areas to catch some nice plays, right? But sometimes you might just be at the start of a downtrend and you might just not get it at the right time, and that's totally fine. That's a valid loss. What we don't like to see is when price likes to tap into our stop loss, or we miss our execution entry and we enter really late, or we miss our take profit, we don't set it properly. All those silly little execution errors, we want to avoid those because those are bad losses, right? We just want to take trades that follow our system, follow our rules, because we know that works over a long period of time. Right, we're going to have some losers, we're going to have some winners, but the winners are going to eat the losses by having more winners than losers, or even by winning more than we're losing. Either one of those two. So now we are in a short-term downtrend. I'm not going to take trades. Why? Because if we go look at this rule book, this rule that I made, so what direction is the 200 SMA pointing? Right, it's still pointing up. It's still pointing upwards. Let me put it over here so we can see it. Still pointing upwards. The price is holding above the 200 SMA. But now, is price forming higher highs and higher lows, or lower highs and lower lows? The price is forming lower highs and lower lows. So we had this low right here. Price came down and broke past this low right here. And then we had to break above this high, but we didn't. We pivoted early and we broke past this low, and this was the highest point. So this was our lower high because we didn't surpass this high. So now we are in a downtrend since we broke past this low. And I'm not looking to take any momentum trades, even if we get a momentum candle like this or like this, because we are still in a downtrend. I want us to see us switch to an uptrend before I take any plays, right? And see if we entered off of these trades how we normally would. For example, this candle right here, we would have lost. Why? Because this isn't an uptrend. We are playing against a high probability move, right? And we still wouldn't play this as a downtrend. Why? Because the 200 SMA is pointing upwards, and we're making lower highs and lower lows, right? This shows that the general recent price action is still in an uptrend, so it's not safe yet to do a downtrend, right? Just because the recent price action is doing a downtrend doesn't mean we're ready to do a downtrend. We want to stay patient for those A+ setups, because we need to have all these rules in line for us to take our trade. Now, let's go over the previous day. For example, we drag this with us. Take this rule book with us. If we take a look over here, let's see. Oh yeah, this is Friday. We got 0 trades today, and I'll explain exactly why. So going into market, what do you guys think we're looking for? I'm gonna give you guys like 10 seconds to figure it out, based on our rule book and based on the plan that I told you guys about and how to set it all up. Okay. All right, so going into market, what is a 200 SMA doing? Pointing upwards. What is price doing? Higher highs, higher lows. But actually no, before I say but, so what are we going to look for? We are going to be biased towards long, because we are, first of all, holding above the 200 SMA. 200 SMA is floating upwards, and it's we're forming higher highs and higher lows. Okay, clear uptrend day. But what do you know? Market opens, we dump straight down, we break past this low. So even if we get a momentum candle to the upside, I'm still being hesitant unless it's a perfect A+, clear strong momentum candle with a healthy pullback. I'm gonna get in, but we didn't get that, right? We got some momentum candles, but not strong enough for me to want to enter, because we broke past this low. I want to clear A+ trade. So we broke past this low, we did a pullback, we broke past this low again, so we are in a lower low, lower high, lower low pattern, which is a downtrend pattern. And 200 SMA is still floating upwards, so I'm not taking any trades until I see this either sloping downwards or we start forming an uptrend with the price action starts forming an uptrend. So we get neither of that, right? The 200 SMA slowly goes flatter and flatter and flatter. Price starts chopping back and forth. Why is price chopping back and forth? Just literally look at it, bro. We are not breaking any new higher highs and higher lows. As soon as we make a higher low, we break it and we switch back into the other direction. So I call this the chop range. I don't like trading when we're chopping up or when we're consolidating like this. So when we're chopping like this, we're not going to look to take a trade. When price breaks out like this, maybe we'll look to get in. But at this point, we're already at the end of my trading window, so I'm not looking to take any trades. Plus, even though we did get, for example, we had this consolidation zone, we got this breakout right here, we had a pullback into this consolidation zone, we had this momentum candle right here, it's not A+ for me, because again, this is where the market experience comes in. We are still in this chop area. I want us to clearly move out, get out of this chop area, and show that we want to move before I take any plays, right? If you want to take a play off of this, it would have been a much higher risk trade, because we're still back in that chop zone, and this could have been just a simple fake out, right? These are just the lows and the highs, by the way. I'm marking out like the mean reversion zone. So if price pushes at these extreme zones, it just comes back. So, right, this could have been just a simple fake out, because we didn't move too far away from here, right? As soon as we moved out, price pulled back, reverted back to the mean, the average center point, and it's not a really strong enough breakout for me to even want to look to take this trade with the momentum candle. And what do you know? The trade lost, right? If you guys took this trade, you guys probably would have lost, because you might have thought, oh, we're breaking out, we're starting an uptrend, but we're still in that chop zone. We want to kind of break out of the chop zone and show clear continuation, especially coming out of a consolidation chop zone. So that trade gets out. We're going to delete that trade. And that's why we took no trades today, because we didn't get any trades in that 45-minute window that I normally like to trade. So go back to Thursday. We'll give like a few more examples before we wrap it up and just recap. So we took an order block trade on this day, so I don't think we got any momentum candle trades. If yeah, so going into market, what do we see today? So price was in a downtrend before, like this. See, these are just the lows and highs I'm marking out. So downtrend, lower highs, lower lows, lower highs, lower lows. And then we kind of shifted. So we made this high, lower high. We made this higher low, higher low. We made this higher high, okay? And then price just started forming an uptrend, right? Like this. But the 200 SMA is still like relatively flat and just recently started sloping upwards. So I want to see some continuation of the 200 SMA along with us continuing to form some higher highs and higher lows for me to want to take the trade, right? If we pull out the rules, again, what direction is the 200 SMA pointing to? Okay, I want to see it clearly pointing in one direction, not flat. When it's flat, I don't like to take any trades. So 200 SMA starts just barely pointing upwards, and I want us to see us hold this low right here, possibly push up and then do this sort of thing, but we got the complete opposite of that. Price just fell all the way down and broke below this 200 SMA. So my plan for the day was, if we continue this downtrend like this, I will continue to I will shift my mindset to look for shorts, right? It's very important to be able to shift your plan when all your rules follow it, right? You're not just quickly shifting plan because of your emotions, right? I know I mentioned in the previous videos, don't just randomly shift your plan, but when all your rules, when the new market environment fits all your rules, that's when you should change your plan, right? You should be open to not sticking and getting stuck to one bias coming into market open, right? You should always have rules for how you identify your bias and shift accordingly to those rules, not just randomly changing up your plan midday. I think that's like a better way to phrase it, because these rules are how I determine my bias for the day, right? If the 200 SMA is pointing above, we are holding above price action, and price is forming higher highs and higher lows, then I'm going for an uptrend. But if price falls below the 200 SMA, holds below it for a while, and is forming lower highs and lower lows, that's when I'm looking for a downtrend play. So we kind of pushed back above this high right here. We look like we wanted to potentially push back up, but price just ended up deciding, nope, we are not pushing back up. Came back down, broke past this low, so I'm still sure we're in a downtrend. Pulled back, gave us a move down. You could have honestly entered off of this momentum candle, because this was the pullback momentum candle right here. The somewhat strong momentum candle. Put your stops slightly above the momentum candle. So it was 18. Let's put 18.5. Okay, and you could target the previous low right here. So for a 1.39 risk to reward. The reason I'm not doing a 1-to-1 risk to reward, why? Because the previous low gives me a better risk to reward ratio than the regular 1-to-1 risk to reward ratio. And the idea behind this is, if we are right and the price is in a downtrend, if we catch an entry right here and our stop loss is right here and we are in a downtrend, price should want to go and take out this low. It should want to go and push past this low at least. So what are we going to do? Our take profit is going to be set over here. The only time we do a 1-to-1 risk to reward is when a risk to reward is less than 1, when our take profit is right here. Okay, if our take profit's here and our stop loss is over here, for example, this is like, this distance is smaller than this distance. Okay, so our risk to reward is going to be less than 1. In that case, instead of putting our take profit here, we're going to put it like right here. That's going to make these two distances equal. And that's going to equal a 1-to-1 risk to reward ratio trade. Okay, now hopefully you guys got the idea of why we do that. So take profit is going to be at the low right here. And price very barely just hit our stop loss right here, but we ended up banking and hitting our take profit right here. And I didn't take this trade back then because it didn't look clear to me, and I wasn't really looking for a momentum trade. I was more biased towards an order block trade. So that's what we got. Now, yeah, that pretty much covers like how you're going to look for trades. I think we kind of got like every sort of scenario. Jesus Christ, what are these indicators? Every sort of scenario where price is consolidating and it's not easy to predict, and we have to adjust our plan accordingly, which is, I'm glad we covered that, because that's we also covered some concepts that require might require some market experience to see what's going on, right? That's a very important topic to understand. You guys are not going to be able to perfectly time all the trends and momentum catches and bottom take the top, bottom take the next leg up, or top take the next leg down, because it takes time to start observing this on the real-time chart and knowing what's an A+ setup and what's not, right? That just all comes with time and market experience, and over time, just you looking for setups and taking this trade and journaling and tracking and reflecting, you are going to become a better trader with the system. And again, once you learn the system, don't just hop onto the next shiny object whenever you see you're not performing that well within your first month of using the system, right? Because it takes months to potentially, like, I would say 1 month up to like 6 months to master down one system, maybe even a year for some people who are, it might take them a little longer to like get a system down, right, and break down those bad habits. So it's all about putting in the market experience and journaling and tracking and reflecting, which we'll go over. I know we keep talking about those concepts, but they're very crucial. I know that's why we keep talking about them, but we'll go more in depth after I cover the basic stuff that you need to know beforehand, right? I want to cover that. I want to go in order. And the reason I keep bringing up journaling, because it's something I always do. So it's just a really good habit to have. And I keep talking about it because I really want to explain more about it, but I want to save that on a whole separate video because it's going to be a really important topic to cover, right? A very in-depth topic to cover. But for the most part, apply these rules every single day and learn how to spot momentum and spot trend and understand how to curate your plan going to market open and how to change it accordingly to your rules, not according to your emotions. And over time, you'll slowly master the perspective of this trend following momentum system, right? This is just one perspective to view the market. Not saying this strategy is the holy grail. I'm not saying this is the secret to making money in the market, but it is my strategy, the way I like to view the market and the way that makes sense to me the most. So I built rules around it. I built a strategy around it and what works best with my personality. And I'm teaching that to you guys, right? You guys, I don't recommend you guys copying my exact strategy to the T, right? But I do recommend building off of it and getting ideas and implementing them from whatever you think you want to try. Because you guys might implement this strategy and figure out, yo, low-key, I want to try this out. Let me see. I kind of want to see if it'll work better if I do, for example, a 1 to 2 risk to reward trade or 1 to 3 risk to reward trade. Maybe you're like, okay, instead of putting my stop loss at the low of the momentum candle, what if I do at the complete, for example, or at the high of the momentum candle in this case? Let me put it at the high of the entire pivot or the swing high, and let me target the low as well, or let me target just a simple 2-to-1 risk to reward ratio or a 3-to-1 risk to reward ratio, whatever you guys want. Like, it's all about configuring it the way you want. Okay, it's all about personalizing the strategy in a way that makes sense to you the most. That's exactly what I preach, and I want all you guys to understand that there's not one way to win the markets. You got to find an approach that makes sense to you and curate it in a way that matches your personality and your thought process. Okay, and that will come with time and experience and trial and error, and that's why it takes so long to become a profitable trader. You need to find a method of trading that suits your style, suits your personality, and works for you in the long run. All right, that sums up this video about putting it together. I still don't know what I'm going to title it, but it's going to be something about putting the strategy together. Maybe this is going to be called strategy build, or like put it together. I don't know. It's going to be called something along those lines. But hopefully you guys understood the topic about how I'm going to put this together, and I explained to you guys like the different scenarios of what it could look like going into market and how you would react to that. But yeah. So I will see you guys in the next video. Next video, I honestly don't remember what it covers. I have it written down, what I planned for it, but we'll check that out after I finish recording. So I will catch you guys in the next video. Take care, y'all.